You may have heard of their grandparent, the Federal Reserve. Today I have for us the latest annual report of Bank of America Corporation. It doesn't matter if the Federal Reserve is backtracking, mumbling, and generally making no sense. It is up to the mom and pop banks like Bank of America to actually deal with the consequences. Let's dive in so that your wisdom can blossom. Income statement. I am continuing to have some camera setup problems, and so still no face for this video. Revenue broken into interest income and non-interest income. Total revenue is increasing. The provision for credit losses is increasing kind of rapidly, but not quite doubling. And right here at the bottom, the net income applicable to common shareholders has decreased relative to last year. That means on a per share basis is that earnings this year are less than last year, but you actually do get a share with higher dividends. Kind of up to you to figure out what you value more in that mix. Instead of the balance sheet, we're going to look at the Table 8 prepared by the CFO's Department of Bank of America just for us. We are looking at the average balance columns for the last 3 years. Pretty much every single category of asset is up since 2 years ago, one exception being right here, commercial lease financing. Bank of America, as an organization, backing away from people who own offices. Statement of cash flows. Despite the earnings per share decreasing a tiny bit, the net cash actually shot upward very, very quickly, a $50 billion swing here. The majority of this is made up of a slowdown in how many originations and purchases there were of loans held for sale. Especially compared to 2 years ago, this business activity has slowed down very quickly. I'm always fascinated when any company, but especially when a large company, can make cash swell on the cash flow statement without having to raise net income, which is what they get charged taxes on. Owners of Bank of America essentially receiving multiple times more money than they did last year, but not really paying more taxes on it through the corporation. As owners, I need to get a sense of, is this good that we're generating cash, or is it meaning that the business is slowing down? But I gotta guess what rank this is gonna get now. Around this commercial real estate issue is a pretty diverse portfolio of other financial assets. And we're looking at a business that literally made almost $45 billion last year for actually doing a little bit less compared to a year earlier. So while I don't think Bank of America is a screamer of a stock, it might not be hitting any home runs anytime soon, I really don't think this can get a bad ranking. So my guess is that this is going to land between the 30th and 40th percentile. Above the average would be 50%, but not necessarily something to go crazy about. But what do you think? Sage Seeds AI is going to give us a valuation ranking. Sage Seeds AI is trained to identify potential value investment opportunities. Whoever among you gets the closest is clearly destined to invest like a financial sage. Bank of America ranked in the 15th percentile in value for the 2023 season. That's way closer to the top 10% that I thought they had any business being. But I guess maybe it's undervalued in current markets is the only explanation I can think of. Genuinely wasn't going to guess this high. But now that I see it, yeah, maybe people are undervaluing these banks a little bit right now. Maybe they're just sick of seeing the Federal Reserve in the news. Do you agree that Bank of America's value hidden in plain sight? If you have any more questions about their balance sheet, ask them in the comments. Please remember to like and subscribe. Thank you for watching until the end, and I'll see you in the next video.